Everyone talks about Nvidia, but the real powerhouse of the AI revolution is a company that Nvidia depends on. TSMC controls over 90% of the world's advanced chips, the silicon that every AI model runs on, and despite explosive 51% earnings growth, the stock trades at a peg of just 0.59. That implies nearly 70% upside from the current price. This isn't hype, it's the backbone of the entire AI build-out. With unmatched technology, massive demand, and revenue growing at plus 20% a year, Taiwan Semiconductor may be the best AI stock of the decade. Let's break down why. We believe that Taiwan Semiconductor is the backbone of the AI revolution, and we see a 69% implied upside from the current market price. And the reasoning is as follows. We see that Taiwan Semiconductor is very integral to the AI infrastructure, as it is the exclusive manufacturer for Nvidia's, AMD, Microsoft, and Google TPUs, which are very important for the AI boom. We've also been seeing that the company's financials have been growing at around a projected 20% revenue CAGR all the way towards 2029, and now with AI-specific segments growing at a massive 40% CAGR. Now, we firmly believe that there is deep value within this company, as the market is severely discounting Taiwan Semiconductor despite its monopoly status and accelerated earnings, trading at a 0.59 PEG ratio, which is not fully being priced in. They also share a very strong market dominance, controlling around 90% of the advanced node share, everything from 7 nanometers and below. They also control around 100% of the AI GPU market, which is a production monopoly, and they have a very important gen lead above competitors, which is at the same time their moat, which is a 2 nanometer chip. We see here as well that they have an unassailable moat, which is what we really want to acknowledge when it comes to buying companies, right? We want to have a company that is strong, it's growing its revenue, its earnings per share above the rate of inflation, and we want to see typically in these growth names above 10% growth. And particularly here, we see that they have tech leadership, right? It's unrivaled. The technology within the 3 nanometer and the 2 nanometer yields is very, very superior compared to competitors like Intel, Samsung, which are still generations behind, especially in power efficiency. They also have the CoWoS packaging, which is a proprietary for Taiwan Semiconductor as a critical bottleneck here for the AI chips and is fully booked for 2025. They also have massive annual spending, around 40 billion in capex, which is obviously that barrier for entry to any potential rivals. We also have to acknowledge that they do have a neutral stance, right? By them being able to only manufacture the overall chips, they are not competing with their overall customers, right? Nvidia designs the chips and Taiwan Semiconductor manufactures them, not like Intel, where Intel designs its chips at the same time manufactures. So that is a threat towards Nvidia and AMD and any other type of Mac 7 name that actually wants to have their chips manufactured. Now, we do see that they also have industry-leading margins, right? So the gross margins for Q1 of 2025 were around 58%, right? We have to acknowledge that this company is very CapEx heavy. It is not a software company, yet it has those margins like an overall Meta, a Google, right? We see the operating margins of around 48.5%, comparing this to the industry average, which comes in at around 25%. You may be asking yourself, well, how can they achieve these high margins? Well, primarily comes due to the pricing power of the company and the operational efficiency, which do allow its margins to maintain, nearly the double of the industry average. And we've been seeing overall that over the past couple of 20 years and back testing, the company has sustained above 50% margins over 20 years, which is just absolutely phenomenal, especially in a very high intensive CapEx business. We see as well the revenue acceleration. Like I said, here from 2024 to 2029, a mid 40% CAGR, especially for that AI revenue segment, which is very important now. Now, we do have our price target and our upside. We believe that the company will be trading at around $491 over the projection of the next 12 to 18 months. We see intense upside. The majority of the price targets are around a median around 361, with the most bearish case being at 290, but we do not see that actually occurring. We actually see higher projections. So we maintain our fair value estimates of around $491 per share here on Taiwan Semiconductors. Now, many bears have been saying that the company poses a deep risk as it is located in Taiwan, but there is a lot of risk mitigation, especially coming from two key areas. We propose the silicon shield theory, which is that the global economic dependence relies heavily on Taiwan Semiconductor because it acts as a powerful deterrent against the conflict, right? Any disruption in the company may lead to a lot of damage in the economic cycles of both China and the US, as well as it would also ensure that they wouldn't be able to catch up technologically to the United States in terms of AI. So it really doesn't benefit neither of the countries to get involved in any type of conflict, but more primarily China. Also, they're diversifying by opening new fabs in Arizona, Kumamoto, and Dresden in Germany, right? Where Arizona, they are looking to have their 4 nanometer and 3 nanometer fabs. And if we look particularly towards Japan, a little more of the bigger scale, which is used mostly towards appliances and autos, and in Germany as well, more towards autos. But in the US, it's more tailored towards more advanced chips, which would be used obviously in data centers and obviously to power these AI models. So our overall verdict here is that Taiwan Semiconductor is a buy, as it is the world's most important company on sale. We remain our price target of around $491.21 here on this company. Now let's look at the chart of Taiwan Semiconductor to further gauge the overall momentum and see where the stock has the potential to go here over the next coming months. We can see here that the stock has been holding quite well above the overall 50 MA, showing that the trend is still in favor of the bulls and we should be overall bullish biased on this name. Now, furthermore, we do see that from the swing high, pretty much here, this overall anchored VWAP hero market as red, or the overall resistance where the sellers emerge, right? We are now finally above it and we recuperated, right? Prior days, we actually went above it for a couple of times. Then we sold off. We found some sellers, but we actually found buyers here at the 50 MA. And now we're projecting even more towards the upside and finally formed that formation of higher highs and higher lows, with our first price target being towards 375 for the short term, and longer term is going to be towards $465 here on Taiwan Semiconductors. At the end of the day, every AI breakthrough, every GPU, and every data center being built depends on Taiwan Semiconductor. With unmatched scale, insane demand, and a valuation that the market hasn't caught up to, this company isn't just participating in the AI boom, it's building it. If you're serious about investing in the AI era, Taiwan Semiconductor deserves to be on your radar. If you found this breakdown helpful, make sure to like the video, subscribe to the channel, and drop a comment telling me which AI stock you want to analyze next. So without further ado, don't let the markets whip you guys out. I'll see you guys on the next one.